Welcome back. You're watching our continuous coverage here from Davos 2022. And joining me now is Neeraj Kanwar of Apollo Tyres. Neeraj, many thanks for joining us here on CNBC-TV18. It's a volatile environment. But in terms of demand, how is it shaping up both in India, across Europe as well for you?
Well, as far as India is concerned, we see a CV journey which is going positive because of all the infrastructure funds that have been put by the government. So CV is back on the positive curve. Passenger is still slow because of the semiconductor issue, but we are seeing that easing out. So I hope that in the next 6 months, passenger car story will also become positive. As far as Europe is concerned, we're seeing a good demand in passenger cars, 3 to 4%, which is very good for Europe. Plus, with the conflict of Russia and Ukraine, what's happened is that 10 million tires were coming in from Russia into Europe. So that's given us a huge opportunity. As far as European operations are concerned, we've had a total turnaround. EBITDA margins are doubled. And we believe that the Vredestein brand is doing very good for us because our focus is on the ultra-high performance tires for the cars like Ferraris, Mercedes. There our market share is really growing. And that's a high EBITDA margin product for us. So all in all, I'm pretty positive, optimistic as the year goes along. Obviously, there is inflation pressures.
Yeah.
Oil prices are at 110. So that's giving us a lot of pressure, challenges on our bottom line.
I'll get to those pressures in just a second, but I want to talk about the gap on account of Russia. Will you need to ramp up production to be able to meet the demand?
Yes, so we are ramping up. We're debottlenecking our plants in Hungary and in Holland and also in India, because now India is exporting close to 20% of our production goes into Europe and to the US. So we're debottlenecking all these plants to try and see how soon we can take on this challenge of the demand that's coming up in Europe.
And what is the current capacity utilization across plants?
So we are at around 85-90%,
Okay.
coming up from 70-75. Some plants are at 95, some plants, but overall we are at around 85-90%.
So do you feel the need to put in any fresh investments? I mean, you started a new plant in Andhra Pradesh in 2020. At this point in time, any new capex plans?
No new capex, small capexes, just to look at debottlenecking. What the focus is really to now consolidate internally, because we've put up 3 large plants in the past 10 years. Our ROCE has been down. So our whole focus is how can we improve our rate on investment, our ROCE, return on our capital employed. And that's what we are looking at, debottlenecking, increasing our productivity. I want to mention one thing, that we are looking at a lot of digitization in our plants. Machine learning and artificial intelligence. We've opened a digital hub in London where the boys are studying the data from the equipments to try and see how we can increase speeds of our machines and get more production out of them.
Okay. You know, you said that you want to improve on your ROCE. What is the target that you've set for yourself, and how do you get to that, besides, of course, the efficiency gains that you just spoke of?
Well, we are looking at sweating all our assets, looking at small investments in technology and in digitization. Our target is to look at upwards of 14 to 15%. We've taken a vision of 2026 to become a $5 billion company with an ROCE of above 14 to 15%.
And do you believe that you feel confident of being able to achieve that, given the uncertainty?
I totally believe we will be able to do that, because the entire company's focus now is to see how we can sweat the assets that the company is already invested in.
And, you know, newer markets, you talked about one lever in the form of the replacement demand that you hope to capture now that Russia's out of the market, so to speak. Any other new sort of areas of focus where you believe that you could penetrate?
Well, US is a new market for us. That's our next growth market. So for me, domestic markets are Europe and India. And now we have set up an office in Atlanta. We have around 25-30 people there. We're selling close to $50 million. Our target for 2026 is to reach over and above $300 million over there. So America becomes our next target market. We've already launched the Vredestein passenger car tires, and recently we've launched the Apollo truck tires into the US. We're getting a very good response from the market. Demand is there. The biggest issue today that's challenging us is supply chain. And that's all over the world.
Yeah, but specifically, where in the supply chain are you finding the big challenges?
Well, it's the efficiencies of the Indian ports, number one. Number two is supply of containers. The ships which were reaching Europe in 90 days is taking over 4 months now. is just the efficiencies of the ports all across the world. And the freight rates have just skyrocketed.
Yeah.
They've gone like 5 or 6 times over. So the biggest
So
challenge...
is it a container shortage issue? I mean, how from 90 to 4 months, I'm trying to understand why that's the case.
It's a container shortage issue. It is also
a clearance issue?
Docking at the port. Let's say for Rotterdam, the ship is actually going from India to Sri Lanka. There's a transshipment happening. Then from there it goes to, sometimes it's even gone to UK because there's no port availability for docking at Rotterdam. Then it's standing in UK, then it comes to Rotterdam. So we are having huge supply chain issues. And that's something that we need to tackle.
How will you be able to tackle that?
Well, the main issue is to try and do more near sourcing. So if we need it for Europe, try and debottleneck Hungary and our Holland plant. So try and do as much as possible local production rather than getting from India.
You know, that's one of the big challenges that you spoke of, Neeraj, but just in prioritization of risks that you see to being able to get to the $5 billion number by 2026, which is the aspiration and the goal, what do you foresee as the big challenges outside of the supply chain issues?
Well, the biggest challenge is going to be the input costs.
How much of pressure are you feeling on the margins already on account of that?
Well, India is down by 50%, whereas Europe, we've been able to pass on prices into the customers because the competition has done it. Whereas India, we always have a lag effect of 3 to 6 months. We're trying to see how much we can do. But there's obviously, COVID has taught us one thing, that we need to take out the bad costs and invest in good costs. So we've done a lot of cleaning up, so to say, within the organization, made it more robust, made it more efficient, and trying and debottlenecking overhead costs within the organization.
What kind of cost savings have you been able to do?
Fixed expenses have come down 14%. Okay, so it could be warehouses, it could be people, it could be fat lying around the organization, you know, because it is an old company, it's been there since 1975. So one, really, when COVID came, one started focusing internally a lot to try and see how we can get rid of bad costs. And I think the organization has done wonderful by reducing fixed costs by nearly 14%.
You talked about good costs and bad costs. You gave me an example of the bad costs, so to speak, that you've been able to weed out.
Yeah.
In terms of good costs, are you essentially talking about the kind of bets you're making on technology? Is that what you're driving at?
You know, Shereen, we have 5 key pillars that we've identified for ourselves to get to the vision of 2026. So the first is digitalization, where we're putting in a lot of money. Like I mentioned to you, we've opened a digital hub in London. The second key pillar is technology. So we're putting a lot of money into R&D. We have 2 centers, one in Europe, one in Chennai. We have over 350 scientists. So we're putting a lot of money in technology. The third key pillar is brand. So as you know, we have a tie-up with Manchester United. We also support our football league, Chennai Football Club in India. So we're putting a lot of money behind the brand. Sachin Tendulkar is our brand ambassador. And he's not cricket, but he's the god of sports. So, and that's my favorite. And he's an amazing brand ambassador to have. The fourth is people, because we believe people are our assets. So we're putting a lot of training, education, tie-up with universities on our people. And the fifth is sustainability. So we're doing, our target on sustainability is to become carbon neutral by 2050 and to have 40% of our raw materials be sustainable by 2030. So we're putting a lot of money behind sustainability, because if we don't, we will no longer exist. So we need to put in a lot of money behind sustainability. Okay. So these are the key 5 pillars. Those are the good costs where we'll be putting money in.
Well, you know, speaking about some of the near-term challenges, we've also got a power crisis in India at this point in time. Many states facing shortages, including Andhra Pradesh, which is where you've set up your new plant in 2020. How bad are things?
Well, you know, our Andhra plant is a brand new baby, and we were hoping that we don't have such issues, but because of coal shortages in Andhra, they've given the state government has given a directive to reduce by 50%. So we are using Chennai to mix our rubber and get it into Andhra. But we are down, and it's hurting us. So what we are now looking at, we've already invested into a solar company in Chennai. So all our plants in India now are looking at other sources of energy. So there is capex coming up, but small amounts of capex that will come in to look at how we can become more solar powered rather than be dependent on coal. That's what we're looking at.
So how much could this hurt production in terms of...
Well, overall, I think it's down by 5 to 10%. Overall in India. But I think we'll be able to resolve it within the next few weeks.
Okay. Well, what's this Davos? What's been the big highlight for you from this Davos?
I think India is shining in Davos. As the Russians, Chinese, no one has come here. But India is really shining. And India is a great opportunity because everyone's talking about a GDP of above 8.5%. And really, India has really shined. And hats off to the government. They've done a great job. And I think that's a golden opportunity for people to come and invest.
Well, Neeraj, we wish you the very best of luck as you get to that $5 billion mark by 2026. Appreciate your time here.
Thank you.